In this presentation, we will be continuing on with our example problem, this time taking a look at and constructing the statement of financial position. We're going to be constructing the statement of financial position from the trial balance on the left, the creation of the statement of financial position on the right. The statement of financial position will be similar to the balance sheet. We're talking about a point in time, where we stand as of a point in time. And then we're going to be using the top part of the trial balance, meaning we can kind of work from top to bottom, the assets, the liabilities, then what would be similar to the equity here being the net assets section. Note that if you are asked a test question or someone wants to ask you what's the proper way to construct financial statements, should you do the balance sheet or statement of financial position or the income statement, statement of activities in our case, first, most of the time they would say, hey, you got to do the statement of activities first so that you can get the equity section so that you can then fill out the bottom portion of the statement of financial position. I'm going to argue here that you might want to answer that way, of course, on a question for a test question, but I do think it's good, often useful, especially if you're using software such as Excel, to do the statement of financial position, the balance sheet first for a few different reasons. One, you get to work from top to bottom. You get to work from top to bottom on the trial balance. Two, once you complete the balance sheet, you have something that is in balance, and that makes you feel good. You've already figured out a big piece of the puzzle. You can then further go down to the smaller puzzle, figuring out the net position portion of it, which is kind of a smaller puzzle to look at, as opposed to kind of going blindly and putting together basically the income statement and not knowing whether or not everything really ties out, not knowing whether or not the double entry accounting system is working, not knowing whether assets equal liabilities or plus equity, or in this case net assets, until you finish the last piece of the whole thing that you're putting together on the balance sheet. So for that reason, I think it's easier to do the balance sheet first. We'll discuss this a bit more when we get to the end of the balance sheet, which will be the net assets portion, what would be similar to the equity portion. You'll note on our trial balance, it is in order in terms of assets in green, liabilities in orange, what would be the equity section here being the net assets section in the light blue, then what would be the income statement accounts, revenue minus expenses here. We're going to say the statement of activity accounts, similar to revenue kind of accounts and expense accounts in the dark blue. We'll be focusing up top on the assets liability, and then we'll have to think about the equity section or the net assets section for that final component of the statement of net positions. Let's start this out. We have the assets first, of course. We're going to start just from top to bottom. The first asset is going to be cash. We're going to pull over the cash. We're going to put it into an inner column. So here's the cash. We're going to pull it over to the other side. We're going to find a home for each of these. Once we have found a home for all of these accounts, we should then be in balance. We're putting it into the inner column on our statement of net positions, not because we want debits and credits on the statement of net position, but because we want a subcategorization. So we're going to have a subcategorization indenting, pulling it into the inner column, subtotaling into the outer column. Then we have the short-term investments. So short-term investments, we're going to be pulling that in as well as another asset. Straight down the line, we're going to go to the grants receivable. Grants receivable, the next item. Next, we're going to have the prepaid expenses. So prepaid expenses, next item. Then we're going to have the equipment net. All that means, of course, is that we're going to be netting out the equipment and the related accumulated depreciation account, which is a contra asset account given here by a negative number representing the credit. Therefore, the book value of the equipment is going to be the cost, $12,800, minus the accumulated depreciation, $4,308. And that's going to give us the $8,492. That's what we're going to record on our statement of net position in the net amount. Then we're going to have the assets restricted. So we're going to have another category within our assets section for the assets that are going to be restricted. Restriction in this case for endowments. That's going to be related to our investment account. So we've taken care of these two. We're on this one that will be restricted. We're going to put it under that subcategory into the restriction amount at the $5,887. Okay, then we're just going to sum these up, of course. So if we were to add these up, we would just say it's going to be the 4229 plus the 9811 plus the 5960 plus the 960 plus the 8492 plus the 5887 is going to give us the 35339. So that's going to be our total assets. We have found a home for all of the assets. That is good. Now we're going to go on to the next section, which of course is the liabilities. Liabilities, we have the accounts payable and accrued expenses. We're going to pick up this amount represented as a credit on the trial balance. We do not have debits and credits over here, therefore we do not represent it with brackets around it. We do put it into the enter column, not because the columns represent debits and credits, but because they represent a subcategorization, pulling them into the enter column to get that subcategorization. Then we have the deferred revenue, same system. Then we're going to be summing those up in the outer column, that being the 2926 plus the 6020, giving us the 8946 in the outer column for the liabilities. Finally, we have the amount or the area that's most different, that being the net assets, what would be an equity section in a for-profit organization. So just remember, whatever type of organization in general, in total, this section is basically the same thing. It's assets minus liabilities, or assets equal liabilities plus whatever you want to call this section. For example, if it were a sole proprietor, it would be owner's equity. If it was a partnership, it would be partner's equity. If it was a corporation, it would be shareholders' equity section. Not-for-profit organization, we're going to call it net assets, which is basically you could think of as the assets minus liabilities, the net assets section. Now, this is the one that gets a little bit funny. This is the one that people often say, hey, you got to do the statement of activities before you do the net assets section. Now, I would recommend that that's not necessarily the case, because I would like to basically find something that's going to be in balance in the statement of financial position. Note that in essence, what we're doing here is all of these blue accounts are going to find a home here. Now, it's a bit more complicated because we're going to be breaking them out between categories, these being the three categories of the net assets without donor restrictions, with donor restrictions by program, and with donor restrictions for the permanent endowment. However, when we think of it in total, it's basically one number. It's going to be this 26,393. So even if we didn't know this breakout and we needed to do some more work to do the breakout, it would be worthwhile for us to basically sum up all of these numbers and see if we are in balance. Because if we are, then that means that we have a smaller puzzle now. If we're in balance, if we know that this 26,393 is correct, then we don't have the problem of thinking that something may be wrong in the whole statement. Then we just have the problem of breaking that amount out to these three numbers. That's a smaller problem. That's easier to do. Now, the way to do that, the way to get to this 26,393, if we didn't know these three numbers, is that you would have to basically add these up on the trial balance. This is a little bit more difficult to do when you're not like in Excel. If I was in Excel, of course, we would just sum this up. It would be very easy to do. If you're not in Excel, if you have some kind of format that's not as easy to do, then you'd have to basically spend a little bit more time with it. I still think it's going to be worth it, but it would look something like this. I'm going to add up. So bear with me if you don't want to go through the adding up process, but I think it's useful to do just to show how we would start to reconcile this information. So we're going to say the credits minus the debits here. So if we had to do the math on it, we'd pull out the trusty calculator. We'd say the 9131 plus the 14445 plus the 5887 plus the 44121 plus the 1303 plus the 688 plus the 16785 plus the 7084 plus the 2446 minus 22366 minus 23311 minus 18638 minus the 11183, and that's going to give us the 26393. It's a rounding. The difference is rounding. I didn't add the last two. I mean, you could, because they're just going to cancel each other out. We'd say minus the 3800 plus the 3800, and that's going to give us the 26393, and that's going to give us our total here. I think that's worth doing on the balance sheet so that you can check it out. Now, you could also say, well, it's just going to be the 35339 assets minus the liabilities of the 8946, and that's going to give you the same number. However, it's, again, rounding is the difference. But you really want to take it from the trial balance, because of course your goal here is to find a home from everything from the trial balance to here. And so the way you find a home for all of these numbers is to add these up. This would be the final number that you would have there. And then you could go back and say, okay, are we in balance with the final part, which is the total liabilities and net assets, which is similar to assets equal liabilities plus equity. And that's going to be the 35,333 equals the 35,333. This amount is, of course, the 8,946 plus the 26,393. That's the 35,399. So we can see that we're in balance now. So this puts us in balance. We found a home for everything, and that puts us in balance. Now we have the smaller problem of breaking these three numbers out into these categories. How do we get to those categories? And we have the smaller problem of then doing the income statement or the statement of activities, which is in essence breaking this number out to the activity during the time period, breaking out these temporary accounts that we have then combined to this 26,393. So first, let's consider these three numbers. How would we break these out? One way is to take a look at the post-closing trial balance that we had done previously. So if we look at the post-closing trial balance, you'll see that we have just the assets, the liabilities, and the equity section. All the accounts below that, we had closed out to the appropriate net asset accounts. So we have closed everything out to the appropriate net asset account. It's still in balance because the assets equal liabilities plus equity, but we have closed out all temporary accounts to the appropriate net asset account. Therefore, we could just pick up these three numbers. So we're just going to say, all right, here's the equity section or equity section equivalent, the net assets section. The 8,558 is going to be here. In the net assets without donor restrictions, we got the net assets with donor restrictions, the 11,948. And then we have the net assets with donor restrictions for the endowment. That's the 5,887. Then, of course, we can add those three numbers up. The 8,558 plus the 11,948 plus the 5,887 is going to give us that 26,393. The 26,393 plus the 8,946 gives us the 35,399, which is the liabilities and net assets, which is equivalent to the total assets. Next time, we'll take a look at the statement of activities, which would then break out a bit more of the problem. Now we're going to look at the statement of activities and look at this number and basically break it out into more detail, having confidence that we have already found something that is in balance with regards to the trial balance, the assets, liabilities, and net assets in balance, having the smaller problem then breaking this number out between its temporary accounts and its prior period balances. And that's what we'll do next time. Statement of activities similar to the income statement.